The first trading day of September has started, and it definitely started with quite a bang. The S&P 500 at the time of recording this video is down about 1.5% today. The Russell 2000 is down almost 3%, the Nasdaq is down 2.5%, even the Dow is down about 1% today. The VIX is soaring 17.5% to $18.28. Now here in this video, I will explain exactly what's going on and what you need to know, because this is a pretty large down day. And on a technical basis, we now sit at a critical level for the S&P. If we do fall from here, you're going to start to get into a zone that could send us much lower. But what you will notice if you are a Tesla stock investor is, in fact, Tesla is actually in the green today. At least at the time of recording this video, Tesla stock is up about 0.25%. Some other stocks like Dollar General are in the green, CVS is in the green, healthcare, and it's actually not all as bad under the surface as you would think if you look at the headline S&P with the RSP. This is the equal weight S&P that's down about 1%, but there is some resemblings of a rotation today, with big tech really carrying much of the selling pressure. Apple down 2.4%, Nvidia's down 7.5% today, Google down almost 3%, Microsoft down 1.5%, Meta down 1.4%, and Amazon down a little over 1%. Big tech is definitely playing its part to drive markets lower. So there's a couple of different things that are happening today. First and foremost, September is just a really bad month for stocks. And I think some investors want to take some positioning off of markets, as we did go through that 10% correction late July, early August, and bounced all the way back to almost new all-time highs. There makes sense that, you know, you're seeing some risk off behavior, some profit-taking behavior into a historically really bad month. I mean, September has been just terrible, especially in recent years. 2020 was down about 5%, 2021 was down about 5%, 2022 was down 10%, 2023 was down almost 6% in the month of September alone. Like, those are big numbers. Wouldn't you take some off the table if you had big gains heading into that kind of seasonal historical weakness? Next up, we did get weak manufacturing data today. This article says weak manufacturing measures raise specter of U.S. economic slowdown. It says ISM monthly survey of purchasing managers showed that just 47.2% reported expansion in August, above the July reading but below consensus forecasts. Another weak economic reading raises the probability the Fed will be cutting interest rates by at least a quarter percentage point later this month. It says, quote, while still in contraction territory, U.S. manufacturing activity contracted slower compared to last month. Demand continues to be weak, output declined, and input stayed accommodative, said Timothy Fiore, chair of the ISM Manufacturing Business Survey Committee. Demand remains subdued as companies show an unwillingness to invest in capital and inventory due to current federal monetary policy and election uncertainty, he added. ISM manufacturing employment came in at 46.0. We were expecting 43.6, so that was really good. Construction spending came in worse than expected at negative 0.3%. New orders came in at 44.6. We were expecting 47.7, so that was well worse than expected. And manufacturing prices came in higher than expected at 54.0. We were expecting 52.8. So for anyone that is in that soft landing camp, you're not seeing many signs of a soft landing in the manufacturing data. Now that raises some concerns heading into tomorrow's data, which is the JOLTS job openings. We are expecting 8.1 million job openings. Last month we were at 8.18 million job openings. So expecting a slight contraction of overall job openings. The risk is if that number does decline by a lot, I mean, then you're going to have more fears about the economy, and that is not going to look good heading into Friday's BLS jobs report. So that manufacturing data today is also causing a bit of a sell-off. And last but not least, you also have Nvidia that is down about 7.5%. It was down over 8% at points today. And some of this could be due to this. It says here, Nvidia is flashing a sell signal, and its huge rally marks the peak of a 40-year market cycle, veteran strategist says. So there was a new note put out today by Bill Blaine, where he's essentially making the argument that so many people have gotten rich off of Nvidia, like actual employees that work there, that there's probably not that much upside left from here, and there's probably not a huge incentive to hold on to all of these gains and just hope for the best, hope the stock continues to go up. A lot of people are going to start cashing in good chunks of their profits. Now, he referred to a recent poll that found 40% of those who worked at Nvidia had a net worth between 1 million and 20 million, while 37% had a net worth over 20 million. That's crazy. Blaine said that leaves less than a third of Nvidia's staff with any real daily financial pressure upon them. He also does cite Nvidia's enormous valuation, which, yes, depending on different metrics that you look at, if you look at like a price to sales, Nvidia looks expensive. If you look at PE multiples, Nvidia does not look expensive. The problem is if Nvidia were to, let's say, next year not be able to keep up the kind of margins they have for whatever reason, if EPS or profitability were to fall, all of a sudden Nvidia is super expensive. So you really have to make a bet that Nvidia is going to hold up demand and continue to grow their bottom line for many years out the line without any real hiccups here. In that sense, Nvidia's not that expensive. But I mean, after such a pull forward in demand, are we going to see years of continued demand this strong? It's a tough sell, logically speaking. So for that matter, Nvidia is down almost 8% now here at the time of recording this video, and that is definitely putting a lot of downward pressure on big tech and markets in and of themselves. But good old Tesla is still green, up 0.25% today. We did get some really good news out of China as well today. You had 14,400 vehicle registrations over in China for last week. Last year, you came in at 11,800, so that's showing some solid growth, although that was down a little bit from 2022. This number today was seen as really good news. This means Tesla's Q3 registrations are still on track for their best quarter ever and are up 12% year over year and 24% quarter over quarter. And after years of waiting, Tesla has officially launched Actually Smart Summon, stands for ASS, its next generation smart summon feature to normal owners. Tesla says, buckle up for the ride of your life. Except surprise, you're not in the car. ASS, Actually Smart Summon, allows your vehicle to come to you or head to a spot that you choose all on its own. It's like magic, but with more tech and less wand waving. And this doesn't have much to do with Tesla, but X has officially launched its TV app in the US. Discover a new way to experience the world of X as we bring you unique and engaging content right to your living room. It's also being reported that Tesla is the leader in brand loyalty, according to a new report from S&P Global Mobility. They say, quote, Tesla continues to run as the leader in brand loyalty with a rate of 67.8% for the first half of 2024. Customer loyalty has remained relatively consistent. The most powerful battery in Australia and the biggest single power unit ever to be connected to the country's main grid has completed the first stage of its connection and commissioning process. California has awarded $102 million for semi-truck charging corridors, which basically means California is getting ready for the Tesla Semi. Norway's electric car sales have just set a new world record, taking up 94% market share in August. Tesla's Model Y leads sales with 18.8% of the market. If this trend continues, we will soon achieve the target of having 100% zero emissions fleets in 2025. And at this point, do they even have gas stations in Norway? Like, is that even a thing? Let me know if you live in Norway down below in the comment section. It's also being reported that Tesla's FSD supervised V12.5.3 has started rolling out to some Teslas with hardware 4. Tesla is now running a promotion on the solar and Powerwall installation where you can save about $2,000 if you order through September 30th, 2024. This is $2,000 saved on installation costs. Here today, Option activity for Tesla stock is very positive. You have seen 15 different trades, interesting trades, unusual trades from hedge funds and institutions, totaling $3.53 million with a positive order value of 81%. Tesla's short interest of free float sits at 2.95%. You have $17.55 billion currently sold short in Tesla stock, totaling 81.98 million shares. And as volatility is picking up in broader markets, the pricing to short Tesla is becoming more expensive as well, with cost to borrow fees around 9.87% today. So it makes sense. The next stat I'm going to show you, return shares that are being returned today, either being covered on or just given back to the individuals that lent them out, is 652,000 shares today. Borrowed shares, meaning people actually taking these shares, and shorting them into the markets or whatnot, paying that 10% cost to borrow fee, is only about 60,000. So there's 10x more shares being covered today or returned than actually being shorted or borrowed. That's kind of crazy. On net, you have almost 600,000 shares today being covered on, or at least being returned. So that's actually a really good sign, especially when you have markets down this much. And I think overall, it's a really good sign that Tesla's in the green today and markets are doing so bad. This shows you a lot of strength. And again, as I said, you have CVS, you have Dollar General, you have Tesla, you have AbbVie, healthcare stocks, that a lot of them are in the green today, right? So there is some bit of a rotation happening, a move to defensives potentially. TLT is up about 1.41% today. That does mean 10-year treasury yields are falling. They're falling almost 6 basis points today, and that's a pretty decent size fall. One thing that I do find not good for the whole soft landing argument is oil. So if you look at oil today, USO is down 4.5%. Okay, that is not good for anyone that is in the soft landing camp. Okay, oil down 4.5%. Brent is down almost 5%. Natural gas is up 3%, and our BOB gas is down 6%, and the ULSDHO is down 3.25%. Yeah, this is a big red flag for economic activity because oil trades around OPEC, it trades around geopolitical tensions in the Middle East, where a lot of the oil comes from. But the biggest thing oil trades around is really economic activity. If Wall Street thinks there's going to be really good demand for oil, there's going to be a lot of shipping being done, commercial jets shipping things, and overall a lot of commerce taking place, then you will see oil go up, right? Okay, let me put it like this. The easiest way to understand this: anytime you go into a recession, economic activity slows down, oil demand slows down, oil prices fall. Anytime that the economy is good or doing really good or overheating like we've seen over the past couple of years, energy stays high. Oil stays high, it stays in demand. Seeing oil falling the way that it is a big red flag for what is, potentially coming next in markets. I mean, oil is now $70 a barrel. You're starting to break down here. And if you do break down further, especially get into the $60 a barrel range, we're going to have some real problems on our hands. That said, sentiment today for Tesla is bullish at 73, as it should be, since Tesla is doing so well relative to many other stocks. Yesterday, the sentiment for Tesla was neutral at 53. Message volume today is normal at 51. Participation ratio today is high at 56. Percent of stocks currently trading above their 50-day moving average is definitely not having a good day. About 10% of stocks are falling below their 50-day moving average just today alone. That's a pretty aggressive downside move. And again, I still think, what I said in the last video makes a lot of sense. I expected we were going to have a rough Tuesday, Wednesday, Thursday. There's not much of a reason to buy markets, to gamble on markets, if you will, heading into Friday's jobs report, because it's such a big catalyst. If Friday's jobs report is in fact a good one, if it shows, strength in the economy, then I do think Tesla will have a great September. I think the markets will have a great September. But if not, then we're going to have a bigger problem on our hands. So this was to be expected. Now, granted, I did not expect this far of a fall for the first day in September, but we were expecting some weakness heading into Friday's jobs report as is. I think the bigger concern for me personally today is what oil is implying for economic activity. I mean, that's implying that economic activity could be really slowing down here soon. So with that said, let me know what you think about this information down below in the comment section. We have a lot to go over in the next video. Highly recommend you guys join us for that one as well. That will come out at 8 p.m. Eastern Standard Time tonight. So I will see you then. Until then, enjoy your day, and I will see you in the next one.